Time now for our Muni moment, and municipal bond trading volume has absolutely skyrocketed this week after benchmark yields surged to their highest in more than a decade. More than 70,000 trades were executed on Tuesday in the busiest day this year, according to data compiled by Bloomberg. For more insight, let's bring in Stephanie Larosiliere. She is head of municipal business strategies over at Invesco. And when you think about the type of the volume that we're starting to see, is there something fundamentally happening right now, or just has volume been kind of depressed the past few months?
Volume has certainly been depressed the last few months. We had a couple months there where, we had very slow trading days. September was one of those periods of time. But I really think right now we're looking at investors starting to take note of, as you mentioned, yields that we haven't seen in over a decade. I mean, every part of the curve is at a decade plus highs. And we're talking about a muni market where, in the past, when we have seen these yields, they've usually meant that there was some underlying fundamental, questionable, credit issues. And that doesn't exist right now. So it's all about, getting the yield on a long-term basis, being able to either do that on an opportunistic basis or being a long-term investor. And I think that's what we're seeing is just the market taking note of that.
Well, Stephanie, I'm going through your notes and I'm getting excited because you write that the current period through late October may provide an attractive entry point. Why right now? Why is now the time to buy munis?
Yeah, so munis are a seasonal asset class. We had, a pretty strong technical during the summer where we tend to see very low issuance, and it's very simple. Bankers go on vacation and you don't have the deals coming to market, but you have a lot of coupons, a lot of calls, a lot of money getting reinvested into the market. September and October, and September was one of these months, are not months where we tend to have that money coming back into the market, but we do have a good amount of issuance. So it tends to result in a bit of weakness, price declines, and good entry points. Normally, November is a little mixed. Tends to be positive, and January historically has been pretty positive. So we see right now, and I would extend that into November, particularly because the Fed is at play here, could be really good times to take good entry points on a cost basis perspective that I think over the long term investors will be happy that they got in at these levels.
I am curious too about, we talk about some of the longer term economic conditions and how that could affect either new issuance or even to a certain extent in the secondary market. How much do you sort of, fret, if you will, for lack of a better word, about economic conditions? We pull our hair out every day over it for one reason or another.
It certainly matters, right? I think what we have seen, munis this year as well as last year, really couldn't withstand the brunt of what's been happening on a macro scale, right? I think the entire, bond market has been dealing with the exact same thing. So these things do matter. And but I would say in moments where, typical market environments, and I kind of do air quotes with typical, normally munis are not an asset class that will behave like everything else. We tend to provide really great diversification benefits. We tend to have very strong, tax-exempt income that we believe, continues to draw individual investors to our market. And so, on a go-forward basis, we do believe that we're going to see munis do a little bit more of that decoupling. Fundamentals at the muni level are strong. I've been listening to the show. We've been hearing a lot about, the dysfunctionality that is in Washington right now. In munis, we don't have that. In munis, we have states that are passing budgets. In munis, we have rainy day funds that are at all-time highs for 37 states. Fundamentals are strong and things are getting done and things are getting better. It's just that we really haven't been able to get out of the fray of the macro noise at this point in time.
And you're confident here. I understand your argument here with regards to states kind of being kind of on their own island to a certain extent, but you don't worry at all about what's going on with the federal government and how that could maybe impact municipal budgets?
So what's going on with the federal government, certainly we kick the can down the road. We've seen that, we now have unprecedented times. There is an interim speaker. So we could see ourselves, I think, again, in another situation where we have a government shutdown. The good thing about munis is, as I mentioned, those rainy day funds, we've been talking a lot about them here at Invesco. And the reason for that is because these funds can be used in any kind of, situation where funds are short. So, if we find ourselves in a position where we have certain types of municipal issuers that do rely on the federal government for appropriations. Well, they can use the rainy day funds to supplement those until, the government reopens. So we feel that it's a pretty good, a pretty good perspective in terms of where we are relative to the federal government at this point. We've got about 30 days where we feel pretty strongly that municipalities can continue to do well without having any issue related to the government shutdown, should that happen.